Hi traders, this is Gary McLaughlin and the day is March 19th, 2009. So what happened on Wall Street today? Well, post Fed Day, here's a little trading trip that you might find useful. Any day that comes after Fed Day typically reverses whatever direction Fed Day went. So obviously yesterday the day was up. Not surprisingly, today is down. So something you may want to do is if you see a gap up like we did today, uh, after Fed Day, it tends to present a good shorting opportunity. I didn't take that short today because gaps up lately have been getting bought. So a quick review of what happened today. We gapped up to about 800, sell off for a little bit, bounced around for a while, and we got a few minutes left in the day. It looks like the market's going to finish down. Now here's how I traded today. Not a bad day. I do not trade breakouts. I don't follow trends. I'm probably what you could best describe as a volatility trader. And what I do is I try to hunt out the bottoms, the tops and the bottoms of the market. So as the market falls and gets close to the bands that I have set here at 23, I'm typically buying in that area. I realize how difficult it is to pick an exact bottom, so I don't go big when I first start buying. And my first entry here was at 90, 790 even. Small position there. Market dropped a little bit lower where I increased my size a little bit here and then a little bit more down here. I had an order sitting right here that I canceled for some reason and it would have triggered. I should have left it there. And then I had three orders down here that I definitely wanted to get triggered. It would have been a decent size down here. My average price would have been somewhere around here, but those didn't hit, so I just stuck with what I had. If you were watching on the 1 minute charts, there was a very nice setup here where we went below this low and then immediately bounced right back up. And I had my finger on the trigger here to increase my size, but it took off so fast that I didn't want to chase the market, so I just stuck with what I had. So the market firmed up, bounced quite nicely here. And if you notice my exit here, which was at 90.25, I think that is, that was right inside the high of this candle. On the 1 minute chart, the market came to a peak, so I took half of it off right there. And then the other half was at 91.5 for a very nice exit. If you look closely at this top, at 90.75 is where, or 91.75, I think that was. 91.75 is where that top came, so I was at 91.5. So that exit was as good as it could have been. At this point, I wanted to be completely out of the market because if the market came down here, I didn't want to have to keep these contracts on and either decide whether I wanted to stop out down here or average them in. So I wanted to definitely get out of the market there. One thing I try to do is exit at the 22 period moving average here, but considering how I felt the market was going to pull back, I didn't want to take the chance and leave that on. Had I left it on, it would have exited pretty well. Now down over here, what I was doing was tracking these support levels. That one doesn't look very good. Draw this one like so. And then it looked like the market was going to start to turn in this sort of fashion. It looks like we're going to close at the lows down here. Something like this. I didn't think the market was going to get down here, so I started nibbling on the market here, which is a little bit higher than where I wanted to buy. I was buying the top of the candles here, where typically I want to be buying the bottom, so I would have preferred that I bought down here. And had I done that, my next entry would have been roughly about down here. So this exit or this entry wasn't that good. I bought the top of the candle here in the middle of the candle here, so my timing was a little bit off. Nonetheless, this trade worked out pretty well. My first exit was at 83.5, which was right at that high, one tick below that high, so real good exit there. And then the market looked like it was getting ready to turn, and it began stalling in this area. This is where I wanted to get out. This is where I did get out, which was two ticks below this high and right on that 22 period moving average, so my exit there was pretty good. Had I kept it on, I would have squeezed a few more ticks out of it, but I'm not going to worry about that. Moving along, what the market has a tendency right past 12 o'clock, this is 1 o'clock Eastern time, to go on a parabolic move up, and I was hoping that happened. I had an order there to sell. I think that it was at 91 even. I was going to sell a parabolic move up, but that didn't happen, so I had to sell it down. As soon as I put this trade on, it just worked right away. So I figured I had a fairly good chance of getting a decent profit on that. So that was where my initial exit started, and I backed that off since the trade was working right away. And my exit on this was nothing more complicated than buying support. And as the market came down, it stopped right there. I raised my order up to within one tick of that. It came back, filled me. Obviously, I would have made more money had I left it on, but I'm not one of the best traders to let profits run. And as you can see over here, had I let them run there, I would have given them back probably eventually. Over here, I would have eventually given it back had I let it run to try to get something up here. So I don't typically let profits run. So this was a pretty good trade, though, 5 points. I'll take that any day. So it looks like the market is going to close. Let's see. We've already closed. So just about at the lows of the day. So not surprisingly, the market gives a little bit back after Fed Day. So not a bad trading day for me. So that's what happened on Wall Street today. And we'll end this quick video with what I believe is the best voice that I've ever heard.